Have you ever wondered what a stock really looks like right before it makes a big move? Well, today, we're going to break down Walmart, ticker WMT, because it's showing all the classic signs of a major breakout. We're going to dive deep into the technicals and see what story they're telling us.
Okay, let's start with a number, 96.29%. What if I told you that this one number might just be the key to Walmart's entire next chapter? This is how close the stock is to its highest price in the last year. It's right on the edge, and that's exactly why we're putting it under the microscope today.
And here's what that percentage looks like in dollars and cents. The current price is hovering just under 120, and that 52-week high, the summit, is just over 121. You can see it's in that final push. A clean break past this peak could really open up the floodgates.
So first things first, is this just a temporary blip, or are we looking at the beginning of a real, sustained climb? That's the million-dollar question, right? So let's dig into the evidence and see if this trend actually has legs.
Now this is exactly what you want to see if you're bullish. The price is literally floating above every key moving average. We're talking short-term, medium-term, and the big one, the long-term 200-day. This isn't just a good sign, it's practically a textbook example of strength across all timeframes.
And the case for the bulls gets even stronger. The analysis highlights something called the golden cross. This is one of those powerful signals that suggests this isn't just a short-term thing. It points to a potential long-term, fundamental shift in the stock's direction.
So what the heck is a golden cross? Okay, think of it like this. You have a speedboat, that's the fast-moving 50-day average, and it's overtaking a huge, slow-moving ship, which is a 200-day average. When that speedboat crosses in front, it's a huge signal that recent momentum is now strong enough to change the entire trend's direction.
And the evidence just keeps piling up. The ADX indicator, which is basically a trend strength meter, is telling us this trend is fresh and gaining speed, not old and tired. And at the same time, the parabolic SAR is flashing a clear buy signal. It's like having two different experts in the room, and both are giving you a confident nod.
All right, so we've confirmed the upward direction. But what about the power behind it? A trend is nothing without fuel in the tank. So now let's see what's actually driving this move.
Okay, now this is where things get really interesting. 9.73 times. That is how much the trading volume exploded compared to normal. This wasn't a quiet little move. This was a roar from the market, a massive statement of intent.
You know, volume is the market's lie detector, and a spike this big tells you something is real. This isn't just a bunch of small-time investors hopping on board. No way. This signals that the big money, the institutional players, are making a serious, high-conviction bet here.
And the momentum gauges? They're all lit up. The RSI, think of it like a speedometer for the stock, shows we've got strong acceleration. But we're not redlining yet. We're not in that dangerous, overextended territory. At the same time, the MACD has a clear bullish crossover. Another big green light that the upward push is still gaining steam.
So the bull case looks pretty solid, right? But hold on. A good analysis always looks at both sides. Every great story needs a little bit of tension, and in trading, it is absolutely crucial to look for those caution flags. So let's play devil's advocate for a minute.
And this is where the plot thickens a bit. While the momentum looks great, some of the other oscillators are flashing yellow. The stochastic indicator is up in what we call overbought territory, and the money flow index is actually diverging from the price, which can be a red flag. It's like we're seeing this classic tug-of-war between strong forward momentum and signs of potential exhaustion.
So what does overbought actually mean? It doesn't automatically mean sell everything. Think of it more like a runner who's been sprinting for a while. It just suggests the stock might need to catch its breath, you know? Maybe it pauses and trades sideways for a bit, or even pulls back slightly before the next leg up.
Okay, we've seen the strong case for the bulls, we've explored the potential risks and the caution flags. Now it's time to put all the pieces together and figure out what the final verdict is here for Walmart.
When you weigh all the evidence, the conclusion is pretty clear. This appears to be a legitimate, strong, bullish breakout. And the real clincher, the smoking gun, is that massive spike in volume. That's the ultimate confirmation that this move has real conviction behind it.
So let's boil it all down. What's the takeaway? The big picture is undeniably bullish, right? You've got a powerful trend, big money buying in. The main challenge is in the short term. The stock is running a little hot, and it's staring right at that major resistance level. It's a classic battle, long-term strength versus short-term headwinds.
At the end of the day, it really comes down to these two numbers, 1, 21, 23. That is the line in the sand. If the price can break through that, we could be looking at a whole new ballgame. On the flip side, 117.53. That's the support level the bulls absolutely need to defend to keep this rally going.
And that leaves us with the big question, doesn't it? Will Walmart pull it off? Can it achieve what traders call a blue sky breakout, where there's no resistance, no history, just open air above it? The technicals are aligned, the volume is there, the stage is officially set. Now we just have to see if the bulls can take it from here.